following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Tom in Derry, New Hampshire. Hey, Tom, what's going on?
Mr. O'Brien, how are you today?
I'm doing great, man. How you been?
Good. This is like old timers week. I heard Rick from British Columbia. I'm waiting to hear Greg from Long Island.
I like that. Totally, man. Totally.
By the way, your website, unbelievable. Watching that thing change over the years. You guys are doing a bang-up job. You get great guests, and
well, listen.
Keep up the good work, man.
We appreciate you being out there. We never can do it without all you tigers and tigresses, Tom.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Live in faith that the whole world is on your side so long as you're true to the best that is in you. Market-wise, let's take a look at it out here. We have the Dow Industrials up 311. NASDAQ up 75, S&P's up 35, gold contract down $1.70, trading at $1,134 an ounce. Silver up 36 cents, $15.62 an ounce. Platinum up 4 at $9.14 an ounce. Copper up 3 pennies at $2.35 a pound. Light sweet crude up 83 cents at $46.37 a barrel. Bonds 10-year down 17 ticks, 128.26. 30 off 1 full point and 20 ticks, 157.06. King dollar up 278 ticks, 96.24. The euro down 35 at 111, and the yen trading at 120.49. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have out here? Okay, so we'll start with the SPY. The SPY right now is trading at 198.62. You're up $3 and 62 cents. You have volume of 92 million shares. And what you're doing is that you're going into the downdraft from the 18th. The top of that downdraft is the 198.68. The mind blower out here is that that's exactly what we hit here. This is crazy. So check this out, folks. This is amazing, actually. So when we came off, so the last counter trend bounce we had, so the 24th of August, we get down to 182. Let's just use 186 as the bottom. I'm using the 25th as the bottom instead of the 24th because of the fact that those ETFs were so whacked out. Bottom line, we climbed up from 186.92. We get up to a price point of 202.89. We gap off of that level. And we gap off of that level, you know, the 20th, we definitely had volume. The 21st of August, we had volume. Then we do the counter trend bounce. We get back up on September 17th. So September 17th, what do? We gap down again. We do that with 223 million shares. Well, we're going into that today. We're going to go into it about 110 million. If we lay out right where we are lay out now, this would be a failure on price and volume at the 198.68 level, which is really going to be a mind blower, actually, folks, because the market hasn't pulled back at all out here at all today. It continued to go out higher, and our markets are actually not up like Europe was up. Right now, we get the Dow up 1.9%. You get the S&P up 1.7%, and the NASDAQ is up 1.5%. We're over in Europe. The FTSE was up 2.7. The DAX was up 2.7. France was up 3.5. We go over, take a look at the NDX 100. We use the 3 Qs inside the NDX 100. What you're going to see there, same type of setup. You're going into the 18th. That's the benchmark out here. We're doing that with 26 million shares. The high of the 18th is 106.60. The low is 105.17. We are at 105.66. We've hit 105.78. So the bottom line there inside the Qs is that they haven't tested yet. Now, inside the NASDAQ, this is where it's going to get really intriguing the next few days. And this is what it is. The biotechs, folks, bottom line, look like they want to test their lows, number one, but it looks like could be a large ABC structure on the way down. What we have with the IBB is this. The IBB got to a price point today of 323.59. You're at 312 right now. You have lighter volume as you went into the downdraft from the 25th. You also have a high volume swing low from the 28th. The A point on this would be 366. Your B point is 285. So it's a monster. It'll go after it. It's failing out here now. We'll see if, in fact, it has volume as it goes after that B point. You get volume after that B point and watch out below. Because that, if you just remember, even last week, you had the Dow up, you had the S&P up, and the NASDAQ got taken apart by 1.6% on the way down. Apple. We go take a look at Apple, and this has the context. Apple has the context of not only the NDX 100, but what had happened on Friday is that Apple was the leader inside the NDX 100, inside the S&P, and inside the Dow. Apple had moved from 107 to 111. Not a big price move, but bottom line, weight-wise, it's huge weighting in all those indices. Apple right now, we're at 111.01. We traded up to 111.36. If you close over 111.01, yeah, you can get higher. You close underneath that, and that's a failure just from Friday. Never mind what it's going into. Gold contract. What do we have with gold? Gold contract, wide price spread, accelerated volume, all of the above. You had gold. Jesus. Okay, gold contract is trading at 1134.70. We did volume out here today of 108,000 contracts. This is building more cause to get up into the high that was generated out here on the 24th. That high on the 24th, they have two separate swing points that have juice behind them, meaning high volume highs. You have the 24th of August at 1169.80, and you have the 24th of September at 1156.40. Silver. What we have with silver, silver is actually leading the charge out here, which is pretty wild, because the silver, highly volatile, no doubt, always. It saved itself from the lows quite a few times thus far. And what silver is showing, it has the follow-through, has the price, has the structure, has all of it. Silver is trading up 35 cents, 56,000 contracts. It's going into your swing point that was generated out here on the 21st. That swing is 1577. We've done 1573, and we get the volume behind the move. That's saying that silver is going to more than likely go after its swing point tomorrow. I suspect silver and gold actually want to run up to the highs that were generated out here on the 18th of May, which in silver's case is 1758. So it's a big number. Now, bonds. Let's go over to the bond market. The bond market, folks, continues to give the most consistent information out and has been for long periods of time. When I say long periods of time, I'm talking years, a couple years at least. So what do we have with the bond market? Okay. 10-year. 10-year on Friday, goes topside, has volume, has everything, breaks new highs. Today, and here's the deal. Today, you're backing down with lighter volume. This bond market wants to get up and over the 130 level once again. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow Industrials right now up 298. NASDAQ is up 70. S&P's are up 34. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow is up 294. You get the NASDAQ up 68. S&Ps are up 33. Let's go over and we take a look at the XAU and the HUI. You're going to see both of these have the juice, folks. They're basically, they are on the move, and they have some good juice behind them. So if we take a look at the XAU first, XAU, Philadelphia Gold and Silver Exchange, is up, index rather, is up $2.80. You had volume come out of 44 million on Friday. You're up and over the first swing point of the 18th, which is 49.77. That's in the XAU is going to now make the run up to the August 21st swing, which is 54.74. We go take a look at the HUI, the Gold Bugs Index. Gold Bugs Index right now is trading out at 120. 120.15. That also came in with juice on Friday. It's up 5.50 today. We're at 120.20. Friday we came in with 24 million. You are over the swing point from the 18th. That's making this run up to the 133.11. Now what you also have is this. In both cases, the metal, meaning the gold and silver, the XAU, the HUI, all of the above, each one of them had broken the downtrend, and that downtrend was broken, quite a while ago. The downtrend was broken on August 10th. That's where we come down. When I say broken, I'm talking about the downtrend from May 14th. And so that was quite a leg down. Bottom line, you broke it, you come back, you tested the lows, you had a couple signs of strength coming off those lows. Now it's going for it once again. King Dollar. Let's go take a look at King Dollar. What do you have with King Dollar? King Dollar on Friday went south once again with juice. King Dollar out here is trading DX. Okay. King Dollar is trading up 268 ticks, 96.23. What it did today is it rejected lower price today, has lighter volume. That's after coming down on Friday to 95.30 with 50,000 contracts. After coming down on the 18th of September with 34,000 contracts, but the bigger one is she has a monster high volume low on the 90 at 92.85 That little baby, I suspect, wants to make a run to this high once again, and each and every time up there, it can't handle price. The swing point is 98.74. That baby has not been able to get even close to that swing point. What has happened each and every time that it goes up, it gives it up way before that level. Okay, so XLF, financials. We take a look at the financials. This is what we have with the financials out here. Financials are trading at 23.14. This also has 25 million shares. You're coming into 61 million. It's not enough. It's a consolidation, no doubt. But what this is also showing is this. When we came down Friday, you have a high volume low on Friday, not just the high volume low that was generated out here on the 24th. The high volume level on Friday, guess what? That wants to get tested. We'll see if the 24th wants to get tested. The XLE. What do we have with the XLE? XLE, which is, of course, the big oils. XLE right now is trading at 65.86. That has some good price movement out here today. 18 million shares. That's going to go after its swing high. That swing high that we're talking about is 66.86. That's the high where you get two separate ones. One's 66.44. We've done 18 million shares. That's not a bad setup. If I go take a look at ExxonMobil, XOM. So she's gapping higher. Yeah, she's up 80 cents. She's over the swing point. Let's say, okay, the swing point we're talking about she's over is the 28th of August. That had 18 million also. You're at 14 million. So that's saying it's going to go right up to ICE. ICE on this baby is up there at 78.67. That's where that's where it had broken the last leg down. The oil itself has broken down pretty extensively. Now, let's go take a look at the actual oil contract. Oil out here right now is trading at 46.35. Let's see. Okay, so this doesn't have the juice. Now, that's good. Okay, so what we have, you're up 81 cents. You're at 46.35, but she's dying on the vine. She's going into 479,000 contracts. Thus far, we've only done 295,000. So the way that baby is set up is that baby set up, that's going to be a test of the high. It'll stay in the consolidation. More than likely, you're going to see it come back down the bottom of that consolidation. Inside the indices out here, this is what you have. The only stock that is negative inside the Dow Industrials happens to be the strongest stock that there is, which is Nike. Nike's down 62 cents. The leader is a dead cat. That's Caterpillar, literally, up 370 at 69.40. You get GE up 139. A hedge fund came in about 2.5 billion of GE. That's up 1.3 at 26.86. Cisco is up 116 at 26.92, and you get DuPont up 194 at 51.20. DuPont is also a dead cat. DuPont has just traded from $72 down to 47. Right now you're at 51. Inside the Index 100, strength versus the weakness here. You have the strength is Micron Tech up 155. Mattel's up 150. You got Seagate Technologies up 215, and Netflix is up $5. The weakness is BioMolyn, and that's down $3. SWKS is down $2.16. Alexa Pharmaceuticals off $3.58, and Biogen is down $4.86. If we go over to a couple of the ALX, and we take a look at some of these biotechs, because the biotechs themselves, as I said at the beginning of the program, is the sector that can take the NASDAQ composite by itself lower. So Alexa Pharmaceutical, what it does today, goes to a higher high, has lighter volume, gives it up on price. Biogen is the exact same thing. Biogen is in tough shape. Biogen just snuck over its high of Friday. We got to 292.48. You're at 285.65 right now. So as we come into this close out here, these there's a couple of these numbers in the S&P that are really important. Why? Because what you have is that you are running right into that September 18th downdraft. If we take a look at the E-minis as to where that baby is, this is how it's set up right now. The downdraft on the, it's 1983, and we hit 1979. That's on the future. The top of the 17th, what would have to happen for a failure inside the futures is this. The futures, if they closed under 1972 flat out, that would also give you a failure. Why? Because we're up at these levels with dramatically lighter volume. Right now, thus far, we've done 666, and we're going into a billion. It looks to me like we'll probably do just under a billion shares. It's Tom O'Brien, this is TFNN. Stay right there, folks. Come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. You got Boeing up $1.24. You got Exxon up 85. Citigroup is up 126. Oxy is up 199. Big Blue up 475. Walmart's up 69. JP Morgan is up 128. Let's go over to JP Morgan and take a look at a few more of these financials. JPM. So JP Morgan, and the reason we're looking at some of these banks, folks, is that it's all about rate structure and where these rates are going to go. thus far, the bond market is still saying flat out that rates are not going to go up. In fact, rates are going down. So J.P. Morgan Chase, 10.3 million shares. You're coming into 21 million shares. You're coming into 31 million shares. That's bottom line, folks. You need a lot more juice than that to get up into this consolidation as we came off those highs. You got to remember, we came off, J.P. Morgan Chase came off the high at 70, trades down to 58, has juice all the way down, and now you're coming up, well, in J.P. Morgan Chase, you're not up to the top of that. The top of that consolidation is 64. We go over to Citigroup. We take a look at Citigroup. Second. Citigroup is trading at 51.21. Citigroup also 12 million shares, and you're coming into 24 million. So these babies need a lot more buyers as they move into a higher price. We take a look at Morgan Stanley. Morgan Stanley right now is trading out at a price point of $32.41. Well, this one's interesting because what Morgan Stanley did, Morgan Stanley actually got down to its low. Okay, so Morgan Stanley came off a high of 41. 41 was generated out here the 20th of July. Goes straight down to 30. Has 24 million shares at 30. Does a counter trend bounce up to 35. Comes back down to 30.15 and does that with 22 million. Now you're bouncing off that with 8 million, and the 8 million is going into 16 million. Yeah, this baby wants lower price. This is amazing, actually, because this is the first financial bank that, well, we'll pull up Goldman after that and see what's happening with Goldman. Because if you bring this back, watch this. We put this on a weekly. What you're going to see, pretty intense, actually. You put this on a weekly, and what you're going to see is that Morgan Stanley's trading back where it was in December of 2013. And it looks like she wants to run into $22. That's the way this is set up right now. Let me put Goldman up there, because Goldman was also coming down last week with some real juice. Yeah, Goldman's set up the same way. This is interesting. So these two banks, so Goldman came off its high of 218, goes down to a low of 172. Then there's a counter trend bounce to 191, then blows away that low. It's to 167. Goldman's also coming up. You have 2.7 million shares. You're going into 6.5. We put this back, and we put this on a weekly basis. Yeah, they're set up the same way, man. These financials are going lower. So Goldman is actually trading back to same deal, December of 2013. That's on your weekly. We put this on a monthly. I see what it did. Look at this. When you put this on a monthly, Morgan Stanley probably did the same thing. Well, when you put this on a monthly, what Goldman had done is tried to get up and over its October 2009 high, couldn't handle it. Now the bottom line is that, look at this, man. This thing can come back 137. This can get back to 137. Let's go back to Morgan Stanley for a second. I'll put this on a monthly, because that's serious business. That'd almost be like saying we're not going up for a long period of time. Morgan Stanley will put this on a monthly. Same setup. Pretty amazing. So Morgan Stanley also, when it went to go over its October 2009 high, couldn't handle it, backing down off that level, 23 bucks. You're at 32 right now. So these financials are not done on the way down. You know, there's some real action down there that looks like they're going to want to trade into. We go take a look at the NQs right now. The coming into the close, the NQs are almost at their highs right now. It's up 62 points. The futures. Put this on a daily for a second. Okay, so we're at 4.3 2.4, and the high for today is 2.9, right? Yeah, it's 2.9. So she's coming into. Well, she's coming up to those levels. She doesn't have the juice, but she's holding with price, no doubt about that. Some of the higher volume stocks, and this will be a low volume market as we get up here. Dow Chemical is up $1.50. You got Micron Tech up $1.50. That's a big move. That's only a $17 stock. Twitter is up $1.89. Jack Dorsey's going to be the CEO, is the CEO now. Facebook is up $1.90. You get Netflix up $4.90. Let's go take a look at Netflix, NFLX. Netflix, of course, always has firepower under the Treasury market. I mean, under the market, NFLX, and we are going to go talk with Marty from Massachusetts. Hey, Marty, what's going on?
How are you?
I'm doing great, man. Yourself?
Not bad, really. The reason I'm calling, I was wondering if you could give some guidance on what's happening, what I think is happening with the very short-term yields on the 3-month and 6-month, according to Yahoo Finance, which, maybe it's not completely accurate all the time, but it's consistent. The 3-month has been negative by a little bit for a month, and now today the 6-month is minus 0.02% on the yield, and it just seems a little fishy to me. They're talking about raising rates, and meanwhile, maybe they're doing a little more quantitative easing.
Okay, so great question. This is what's going on. So what happens, folks, is this, is that large corporations, right, have to place their money at night and for short-term durations, right? Well, we don't have enough 3-month and 6-month notes right now. There's more demand than there is supply.
Yeah.
So what's happened, Marty, and as you just said, this started about 6 weeks ago in the 3-month. So what's happening is that in order to buy a treasury, what's happening is that instead of you getting paid, you are paying to own that treasury, so that you can make sure what the corporations want to know is that, are we going to get our money back? So they have turned into a negative yield. I didn't know about the 6-month. I knew about the 3-month, but as you just said, the 6-month probably just went. So that, and this is the bonds themselves, right? Yeah, just stay right there. We'll talk about this for a second, because people don't realize there's not a huge amount of treasuries in the marketplace compared to the amount of cash that's floating in the marketplace. Dow Industrials right now up 298. They get the Nasdaq up 69. S&Ps are up 33. We're going to be right back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is up 298. Nasdaq's up 69. S&Ps are up 33. We're talking about Marty from Worcester. We're talking about the 3-month and 6-month notes, folks, that they are at a negative yield. So specifically what a negative yield is that instead of the U.S. government paying you to own something, you are paying them in order to own that bond. Yeah, so that's what you have happening, Marty. I know, pretty wild, huh?
Yeah. Well, thank you for explaining it. I didn't know if maybe the federal bank was doing something, but evidently it's not. It's demand from corporations.
It is. It's, you know, and if we look, so watch this. When you take, I'll show you this. You know, what had happened is that Dave White had asked me about this when we were on Friday about an inverted yield curve, and evidently people saying that, you know, they must be out there that the yield curve is going to get inverted. We're the furthest thing away from an inverted yield curve, folks. Okay, so if you're watching my screen, I'll show you. Right now, the 2-year is trading at 0.6%. The 5-year is trading at 1 3%. The 10-year is trading at 2%, and the 30-year is trading at 2.8%. What I suspect can happen, or may happen, is that it can flatten out, but we are a long way from inversion. If anything, what's happening, just that the notes, they're going negative. You know, we'll see where the 10-year wants to go, but the way the 10-year traded on Friday, the 10-year got over its high, had higher volume, so the 10-year is not done yet. You know, it gave it up on price, but how we pull back today is another higher probability, number one, that you're going higher, and it looks like a complex ABC up. And the A point is 124, the B is 129, which gives you 132.18 on the 10, which would put the 10 at 2.85, which is just wild. So, cooking, brother.
Thank you.
Have a great one, man. Have a safe one. And what that's all about, folks, is that, so picture this. We haven't had inflation, okay? Well, I think we've had inflation in food. You know, I think food is inflated in a big way. It's going to be easier, however, this year to get inflation in the energy markets. The reason being is that if we take a look at the oil market, and I stopped bringing this up last week, is that what you have is this. I'm going to bring a continuous contract up. So I have a 1-year continuous contract. And in the course of 1 year, you know, we started out this is perfect. October 5th of last year, oil was $90.74. Okay? So now watch what happens. The crash started, let me bring it back a little bit further. I'll bring it back 2 years so you can see exactly where this started. Okay, so It started in June, but let me bring it back to October. I'm going to bring it back to October so you can see how this will shake out now. Okay, so the downdraft was a one-way route. You know, it goes from $100, makes its first low in January, and it makes that low at $43.58. So we're in October 5th right now. Within 3 months, what you're going to have is this, is that no longer inside the CPI is the crash in oil going to help the CPI. And the CPI right now is at 1.8. So what you will have is that if we're in a consolidation in oil, that the bottom is 40 and the top is 61, guess what? Inside the CPI, what you're going to see is that that can put some juice in it because, of course, from 40 to 60 is 50%. Doesn't mean it puts 50% into the CPI. What it does mean, however, is that you will see higher energy prices if we're staying in this consolidation. Higher energy prices are going to relate back into the core CPI. The food is going up. Rent is going up. Those three aspects inside the CPI are going to basically push some inflation. Then what do you do in order to understand, okay, where we are? You're going to take the bonds number that you're trading at, meaning percentage rate. You're going to take the inflation rate, and then you're going to know whether are you at negative real rates, positive real rates, or all of the above. And so if we just look at the 10-year for a second, what you'd look at is this. The 10 years at 2.056. If the 10 years trading at 1.9, and where inflation's running at 2.1, guess what? You're at a negative 0.2% yield. That's how you figure that baby out. It's going to be really intriguing watching this whole thing shake out, because what we do know out here right now is this, is that from those negative 3-year and 6-year, 6-month, 3-month and 6-month notice, we know that there's so much cash and they don't know where to put it, and they're not putting it in banks, okay? The safest vehicle out there is the Treasury market. That's the bottom line. And that's why you see that those treasurers of these large corporations are putting it in the 3-month, 6-month bond, and that's what's turned that negative. And it's small money negative, but the bottom line is that they want to make sure they can get it back. So that's how that whole baby is shaken out. Let's go over to the small caps, because what the IWM did do, folks, the IWM had taken out its August 24th low. That was 108.26. Small caps today, you get 34 million shares. You're running right up into it. It looks like it's going to be another day before it gets to the September 18th level. That is 115.40. Thus far, we've hit 113.33. We actually take a look at the Russell, RUT, the actual index. The index is up 26 bucks today. It did reject a lower price last week, and the index actually stayed under. This is pretty intriguing, actually. 1 second. So we got 434 million. No, it's not at EBC. 381. Well, the Russell had broken the swing point. Didn't break it with volume, however. So what we do have, in fact, is kind of intriguing, because the index itself, the Russell, did not go up with juice on Friday, where the ETF structures did have some juice behind them when they moved to higher price on Friday. We take a look at the SPY right now as we're coming into the close. The SPY is trading at its 198.54. You know, it doesn't have the juice behind it, but they're going to jam this into the close. Right now, you're it looks, yeah, you got 10 minutes. The Qs, the same setup in the Qs. The Qs are going to be close, because it's intriguing with the Qs is that they are testing this to the tick, which is pretty amazing. 105.78 was the number, and we're talking 106. No, 105.17. No, that's gonna be into that pile. This is Tom O'Brien. This is TFNN. Dow Industrials are up 309. Nasdaq up 77. S&Ps are up 36. You have gold down 2. Silver's up 33. Bonds 10 years down 16. 30 years off 1.5 points. And King Dollar's up 273 ticks. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow is up 306, Nasdaq's up 75, S&Ps are up 34. And after the close out here, we get a couple stocks coming out with numbers. Bankrate.com, that's going to be coming out with numbers. And this is going to get really intriguing to see where these babies can go, because their Bankrate and the Container Store, they're both a mess. So Bankrate is down from $13.91. You're trading up 24 cents right now at $6. I mean, with 600,000 shares running into 3 million shares. TCS, this is the Container Store. This equity here, man, there was a huge amount of hype at the beginning of when this went public. This is when it had been a one-way trip. It went public at 18 in October, I think, of 2013. Let me just see this. Yeah, October of 2013, it goes public at $18. When that baby opened up, if you want to see something crazy, this has been a rough one for whoever is in this baby. So it opened at 32, even though it went public at 18. It ran up to 48 and then took a one-way hike back to $12.58. Now, the way this is set up right now, it's like, hey, man, this thing can go a lot lower, too. Mohawk, MHK. This one's going to be an intriguing one to watch. MHK, because of the housing industry. This is Mohawk Industries, and years ago, you'd always think about this as the Mohawk carpet. Bottom line, folks, is they got everything. They got carpet, they got tile, they got laminate, they got stone, they got vinyl. When you're going into, whether it's a Home Depot, almost any store, up and down those aisles, most of that stuff is Mohawk. Mohawk owned, that is. Now, that being said, check this out. This is pretty cool, because this is going to be an important one to see how this shakes out, and this is why. If we take a look at Mohawk, what you're going to see is that beautiful run. I mean, this stock's run from $47 in 2011 up to $200, okay? Now, bottom line, though, we came off that high on a weekly, a monthly, all of the above, and we got down into 174.49. Right now, you're at 195, so it's like, okay, man, you're coming into the downdraft that actually had started August 21st. This one here, and we're up $6 right now, so you're up 3% right now. 1 million shares. This is going to be a decent heads up as to, watch this, I put this on a daily, as to what not just this equity wants to do, but I would say, okay, what the market wants to do. And this is why. When we came off the high, well, first off, you had an expansion that's tremendous. So a normal correction's no big deal. You had this come down off the high at 212, August 19th. First leg down has volume, so someone's getting rid of it. 219 to 183. Come down there with 1.1 million. You do the counter trend bounce, almost hit the high again with 675. You come down again, break it with 1.8 million. Right now you're doing 1 million. And you're doing 1 million, by the way, just like the S&P's doing, just like the Dow's doing, just like the Nasdaq's doing, and it's giving up zero price. It's not, no retracements, no anything. So this one's going to be a cool one. Watching MHK, let's hope that it comes out right after the close. Let me see this. Yeah, it's saying we should get this right after the close, which is really cool because in the context that if you're looking at any of those indices, this is one of the strongest stocks in the marketplace. This can't handle higher price after the close. Great piece of information. You stay right there, folks, and we come right back. Dow is up 300, Nasdaq's up 72, S&Ps are up 34. We're going to be right back, folks.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Remember that there is part of life which you are the explanation. Have to love it. Market-wise, let's take a look at it out here. We had the Dow Industrials up 304, Nasdaq up 73, S&P's up 33. Gold contract down $1.60, traded $1,135 an ounce. Silver up 36 cents at $15.62 an ounce. Silver, folks, got into its first swing point, took it out, going after its second swing point. Both gold and silver want higher price. Platinum up $5, trading at $9.15 an ounce. You got copper up 3 pennies at $2.35 a pound. Light sweet crude up 86 cents at $46.41 a barrel. The oil market, folks, it's the top of its consolidation. Didn't have enough juice. I expect you're going to see oil go down the lower end of the consolidation once again. Bonds, 10-year down 16 ticks, 30 off 1 full point and 16 ticks. Bond market, folks, wants higher price. Friday, what do? Wide price spread, accelerated volume. The 10-year actually went to all-time highs, closed at all-time highs. In fact, it's still at all-time highs. Had the juice behind it, but yet gave up half the price. 30-year did the same thing. When you go to higher highs, have juice behind it, volume behind it, you go right back topside for at least a test. The 10 looks like it's an ABC structure. Well, it is an ABC structure. It's a complex ABC. It took out the B point, took it out with volume. Bottom line is 132. Right now at 128.27. It's yielded, the 10 years yielded 2%. It was 1.9 on Friday. You want a mortgage, folks? Go get it. Because right now, a 30-year, you probably can bang a 30-year out at about 3.1, 3.2, which is pretty cool. King dollar. King dollar up 243 ticks, 96.21. King dollar on Friday came down with volume once again. Today, we came down, had lighter volume, didn't test the swing, rejected lower price. King dollar wants to try to take out its swing point once again. Each and every time, King dollar hasn't been able to get any traction as soon as it gets into the 96.50 area. The swing point, by the way, is up at August 7th at 98. They're all small, minor swings in each one of them. The thing that's a mind blower about King dollar is that each and every one of even the minor swings hasn't been able to make it to the minor swing. Euro down 31 at 111, and the yen is trading at 120.42. Our phone number is 877-927-6648. Give us a call, folks. Wonder what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, gotta love it. So we go up $3.48 today, 121 million shares. You're coming into the downdraft of the 18th where we had 233. What did we do Friday? Friday we rejected lower price, had 211 million shares, and you can see the contraction. It's immediate, it's fast, it's furious, all of the above. You know, we'll see whether the market itself can make it to the 199.28. The 199.28 will be the low of the 17th. The 17th is where we traded up to 202.89. That's the counter trend bounce as it was going against the downdraft, the initial downdraft of August 21st. If we take a look at this, when we came off the highs, folks, at 210 on August 19th, this is what we did. August 19th, you traded $210 in the SPY. We did volume, and it was real subtle. You're rolling over. You rolled over with 172 million. The following day, you rolled again. You know, we're up to 203. But now watch what happens. You went from 210 to 203, and that's just the roll. You rolled then with 194. Now, the steam start getting going in the market. What do you do the following day? On the 21st, you come down with 346 million shares. That's ICE. That's where that's set up. ICE is set up at 204.11. Of course, August 24th was a monster, down on 507 million. The first counter trend bounce, you got back up with 276 million. That's what we're going into right now. Bottom line, I suspect it's going to fail once again right at that level. Why? Because the contraction is already in place. The Qs, NDX 100. Let's go take a look at the NDX 100. And by the way, it's going to be the NASDAQ, I suspect, that's going to bring this baby down, and in particular the IBB. IBB was really weak out there today and set up an ABC structure on the way down. So, the NDX 100. What do we do out here? You do 32 million shares today. Friday, we did 59 million. You're going into 97 million and 56 million. Bottom line, the NDX 100 more than likely is going to get taken south by the IBB. When we go over to the IBB, what you're going to see is this. It traded to a high today of 323. We're at 313. It got over the highs of Friday, closed underneath them, and you can make the case that it's an ABC structure on the way down. We have a high volume swing low at September 28th, 285, and it's a big one too. The A point on this is 366, and your B is 85. So you're talking about what, 66, 76, 81 bucks. If the 81 bucks brings it into the 250 level, it's a big number. Okay, gold. What do we have with gold? Gold contract, folks. Wide price spread, accelerated volume on Friday. We had out here today building a bit of cause. We're at 1135. I expect what you're going to see here is that gold's going to run to the 1169, which is the high of the 24th. The larger issue inside the gold market, though, goes like this, and this is what's really cool. When you bring this back, the last leg down in gold started May 18th. May 18th, gold's trading at 1234. Straight line move down into 1073. When we came off the lows of August 7th, August 11th, and August 12th, that was your first sign of strength in the gold market. Gold went from 1082 up to 1160. Had it all. Then proved it had it all on the retracement because it retraced with lighter volume. Went topside again, had it all, pulled back with lighter volume again, and now you're going with wide price spread again. What that sets up is that on the 11th and the 12th of August, gold had actually broken its downtrend, that downtrend being from the 1234, and that's where I expect you're going to go. The XAU, the HUI, bottom line, both moved with price, with volume, all of the above. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow Industrials closed up 304, NASDAQ up 73, S&P's up 32. We're going to be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finish up 304, Nasdaq up 73, S&P's up 35. Let's go to Alex in Boston. Hey, Alex, what's going on?
Hi, Tom. How are you doing?
I'm doing great, man. Yourself?
I am doing very good, thank you.
Cool.
I have a question about Apple.
Okay.
I am actually shorted on September 28th at 112.
Okay.
And going into this earnings, I'm not sure I have to keep this position, but it looks like to me it's going much lower.
Well, you get plenty of time here. The 27th, they're not coming out with numbers to the 27th. You know, I mean, Apple, you know, you get 2 days that the market's up $600, and you know, Apple moved from 107 to 111, and it's at 110 right now. So there's no buyers in Apple, you know.
Yeah, and there is no sales. Right.
That's right. That's right. You know. So I mean, the way this is, you can put your stop on the other side of 111.87. Where I'm going.
I actually put a stop on the side of 117. I can.
Yeah, but you don't even have to give it that much. See, no, I can see that. You know what I mean? That's at the top of the consolidation. But you can see today it couldn't even trade. It couldn't even trade. Traded to 111.36. The high of Friday was 111.01, and we closed under the high of Friday. So even today, that's a failure on price and volume for Apple, which is pretty cool, you know, in the context of where you're standing right now. Do you know what I mean?
Yeah. So you will put a stop at 111.
Well, see, where I'm going with this, when you take a look at the chart, take a look at September 18th. That's where we came down, and you came down with 74.2 million shares. You could, let's say, put it at 112.04 something. Put something into that bar. You don't have to give it all that, because if it gets into that bar at all, then it will go to the top of the consolidation.
Yeah, and then it can gap up overnight.
Even why give it 5 more points than that? Do you know what I mean? There's not a reason to. That's kind of how. It's nice when you have if you're short or long, in this case we're talking short, and you have a benchmark like this, because that's monster volume. So there's a seller there, so all you try to do, what I try to do is just put a stop inside of that bar. Because if it does get inside the bar, then no matter, it's like, okay, man, now I can get to the other side of the bar, you know?
Yeah. Thank you. So can I ask you a quick more question?
Yeah.
AMLP. Do you think it's a bottom?
AMLP?
Yeah. So is it viable on any pullback?
Let's take a look at it. AMLP. So this is okay. This is the MLP ETF. So this is all those MLPs probably in one ETF. Let me see what we have. Up 41 cents.
It's almost 9% dividend.
Okay, so you got. Okay, so these are pipelines, right?
It's a trust, yes.
It's a trust. Yeah, no, I wouldn't touch this just yet. So what you got is this. No, I wouldn't. No, man. Okay, so check this. So you've gone from $19, and you know it gets croaked down to $11.40. You know, you can get a bounce to $13.95 or something, but I wouldn't touch this yet.
Of course, but on a pullback.
Well, yeah, well, what you could do is this. Yeah, I see what you're saying. So what he's saying is this, folks. It came off the bottom and had some strength. Friday it had strength. Actually, no, this had strength before Friday. That was last Wednesday. Wednesday it had strength. Yeah, see how it trades back into 1262. Where the 1262 is, that's the high of last Wednesday. See if it rejects it. If it rejects it, then you got a range at least. You know what I'm saying?
Yeah.
But you got to be leery of any equity, even trust. Well, I guess they've always paid high dividends, haven't they? Yeah.
Actually, AMLP pays at least dividends. It's an index. It's not a real company. They trust.
Oh yeah, no, I understand that. I can see all the companies that are inside it, though.
Yeah.
Yeah, I mean, so you got their energy. You're dependent on the aspect that.
It depends on oil.
Exactly. Exactly. That's going to basically, get the higher price, And it looks like oil's in a consolidation. But like today, if we looked at oil, bottom line is it looks like, it couldn't handle higher price, So, the lower end of that consolidation is wide open again. Not that that's a lot. You're at 46, 43 is the lower end of that consolidation.
Okay. Thank you so much.
Have a great one, man.
You.
Have a safe one. Mohawk's not out yet, but the container company is. The container company just come out with numbers, and this thing is a mess. This is pretty amazing. This company probably never should have went public. That closed at $15.57. That's trading right now at $14.99. This thing went public, folks, at 18, but it opened to 32, went all the way up to 48, and then took a one-way trip from 48 down to where it's trading right now. So let's see what they say. Company reports 0.1% comparable stores sales increase, sees traction from growth initiatives. The Container Store today announced fiscal second quarter and year-to-date ended August 29th. Let's see. Okay, their sales were $195.5 million. That's up 1.2 compared to the second quarter of 2014. Third-party net sales for the second quarter were up 7.2 million. Consolidated net income is 6 cents. Bottom line is that it looks like they made money, but the market's saying, see you later, see you don't want to be you. So what you have is that when you take a look at this chart, it's something that can go a lot lower too. We take a look at this, you put this on a daily, and it's literally a one-way trip. Mohawk hasn't come out yet. We want to see how MH. When Mohawk comes out, and hopefully it will be out before 5 o'clock. Bottom line is that Mohawk Carpet, well, it's not Mohawk Carpet. It used to be Mohawk Carpet. It's Mohawk Industries now. That closed at 195.12, and they are going to be coming out, well, they're supposed to be coming out today. And as I said a little bit earlier, what's going to be intriguing about the Mohawk is this, is that you have the aspect of high volume swing low after a huge expansion going topside. Yeah, DuPont has got some action out here. Hey, you talk about just action in general. DuPont closed at $51.28. It was up $2. That was up in the aspect that you had a hedge fund manager coming in there talking about a breakup. Well, guess what? The CEO just resigned after the close out here. And let's see what they're saying. So DuPont CEO Coleman retires, and they cut the year forecast. Let's see what they have to say. So the chair and chief executive officer of DuPont is going to retire. The company named Edward Breen, a board member, to fill his position. Operating earnings for the full year will be $275, down from $310. And oh, I remember this woman. Yeah, all right, okay. Bottom line is that DuPont has been on a one-way trip. We just went from $72 down to a $47. It's trading at $53.50 right now. Stay right there, folks. Come right back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow finished up by 304, Nasdaq up 73, S&P's up 32, and as we do each and every Monday at 30 past the second hour, we have Mr. Kevin Hinks from TD Ameritrade Think or Swim. Now, Kevin has the best option show on the planet, folks, right here every Tuesday, noon to 1 Eastern Standard Time. You can get that right on your cell phone, TFNN.mobi. You can also get Tiger TV. Just go to TFNN.com, hit the banner on the right. Now, as you're over at TFNN, you'll see the Think or Swim banner on the top, on the side. You can hit that banner, bring it up. You can get on the platform. They'll let you trade with paper money. It's an outstanding platform, folks, and they just did a whole redo. It's always been great, but now it's even better. Bottom line is each and every day, whether I'm trading options, currencies, futures, or equities, it's all on one platform. Absolutely dynamite. Coming out in Las Vegas. If you happen to be in the West Coast, you want to go to the Traders Expo, Think or Swim, TFNN, Kevin, the crew, we're all going to be out there. That's at the Paris Hotel. It's going to be from the 14th to the 16th, so it's a week from this Thursday, Friday, Saturday. Kevin Hinks, what's going on?
Tom O'Brien, happy Monday.
Yeah, totally, man.
What in the name of Myron Schultz is going on here?
I'll tell you, man. It's intense, isn't it, man?
I mean, China closes for a couple days, and the training wheels are off.
Man, there's no doubt. I mean, the volatility. Well, you know what's so cool? I mean, you talked a lot about the volatility and what, I'm sure the listeners could get out of it. I got out of it. is that what he was explaining, folks, is that, the volatility goes both ways. And, like when I normally talk volatility, it seems that volatility markets always go down. But the reality is that once you do get up in volatility, well, you can go down or up just as quick, right?
Right, exactly. Yeah. And a lot of people are probably sitting out today going, the market's up 300. Why isn't VIX down more than this? Well, it isn't, because there's still volatility in the market that has to be measured.
Right.
And the risk has to be, measured and taken out of that. So it's going to hold these levels.
Yeah, it's pretty amazing too. Because what we have just had since Kevin was on last week, it was at 28 last week when he was on. We're still at 1954. But we came off those. We came off about a 14.5, 15 that had been running for quite a while, folks.
Right, and we were telling people on our swim lesson show today, Tom, that you got to be ready. There isn't going to be any 11.5 VIX coming up anytime soon.
Right.
You better realize that the lows in VIX might be, 18, 19, 17 range, not 11.5 range. So we're in a new volatile trading environment. You got to understand that the ranges are going to be different.
It's so cool, man. And this comes into play, folks. We had a caller at the beginning of the hour, and his question was that the 3-month note and the 6-month note right now, folks, are trading negative. Okay, so what that specifically means is that, you own a company, you want to put cash away for 3 months or 6 months, and you don't want to put it in the bank, which these large companies don't. When they're buying notes, they're actually paying, instead of the government paying them, they're paying for the note. And, I was just explaining to him, I had known the 3-year went negative about 6 weeks ago, but I didn't realize the 6-month went negative. It probably went negative maybe this morning or last week. But that is so cool because that lines up, with that high VIX, because that is fear, right?
Sure.
Yeah.
Of course.
Yeah.
Right, and people are, when that 10-year broke 1.9.
Yeah.
Friday.
Exactly.
It kind of forced the market's hands to choose somewhere else to go.
Right.
It's amazing what's going on, and this has been a historical trade.
Yeah.
In many ways.
There's no doubt. And, we're only at the beginning of the month. So, what we do have, it's going to get really intriguing, I think, when we go up. And you'll probably be on tomorrow when we're up at the higher end of this range. I mean,
sure.
Last time we hit, if you take a look at the, just the cash S&P, folks, okay, the top of this range thus far, and it looked like last time we were up here, it looks like it keep going. It stopped in its tracks at the 1986 to 2020. I mean, that's the number, so.
The question is, and we were talking about with some of the guys here this morning,
yes.
Is this the beginning of a rally, or is this that, in bear markets, there's violent recoveries.
Right.
And in bull markets, there's violent sell-offs.
Right.
Right? And which is that?
I know, man.
what kind does what's happening in this trade resemble?
Yeah.
And the next coming days will show us what it is.
There's no doubt, man. And when we look at the option market, you talk about lots of different opportunities very quick, huh? I mean, because when that VIX moves that much, that's when you're talking strategies, you're talking a lot of different types of strategies that you can be not right on the direction, but yet you're not going to get killed if the strategy is correct.
Right, and that's what we try to teach. If you continue to play the high probabilities, you'll err on the right side.
Right.
People love to, they think the market's going up, so they buy that out of the money call, and they're not playing the probabilities. Whereas you could, sell a put spread against it for a credit and play the higher probabilities. That's what we're trying to teach.
Yeah, no doubt. Now, I'm going to switch gears on you for a second, because listen to this. This is amazing. So just across the Bloomberg, it's saying resale ticket prices for tomorrow's game, the American League wild card game, right?
Yeah.
For the Yankees, folks, check this out. The Yankees and the Houston Astros, they've been the least expensive since the wild card since 2012. The Yankee tickets are only going for $180.
Oh, my God.
Now, watch the other side of it. Chicago Cubs, 300.
Yeah, they got to be going crazy.
300. Isn't that wild, man?
Yeah, right. I mean, it's not surprising.
No.
Right? No, because Houston Astros aren't a big name team, and let's face it, there's some Cub fans that are fulfilling their life's dream right now.
Yeah,
to see the Cubs in the playoffs.
No doubt, and it's pretty cool. I like the idea. I think it's Joe Madden. They got us that was he came out of Tampa, goes up there, and he's a pretty neat guy. So
I called him at the beginning of the season, Tom, the best free agent signing in baseball.
Yeah. I mean, he's
a team changer.
He is, and
I love the guy.
I've seen him. I'm on the field, of course, but I've seen him off the field.
Sure.
And he's really he's low key, but
he
yet
looks like a guy you want to have a beer with.
I didn't have a beer with him, but I was right next to him, and we were having a few.
Exactly.
He was just a cool guy. Do you know what I mean?
Believe me. I look at him and I think that's a guy I could have a beer with easily.
Totally. And in the Tampa area, he'd be at the bars as a normal person, just sitting there with his friends talking. Do you know what I mean? And grooving. So it was pretty wild watching that whole thing.
He looks like a righteous dude.
Yeah, no doubt. Well, listen, man, we appreciate all the work. We can't wait for the show tomorrow.
Looking forward to it, buddy.
What's going to be wild, no doubt, is that the Vols here. What's intriguing out here, even today, folks, is that we were up good, but Europe was up 2.7 to 3.2%. So that is a little disconnect. It's like, okay, why couldn't we get a little more juice out here today?
Yeah.
This overnight session is going to be interesting. Kevin, you have a great one, safe one.
All right, Tom. Can't wait for Vegas, buddy.
Yeah, totally, man. Look forward to seeing you. Okay.
See you soon.
Okay. You stay right there, folks. It's Tom O'Brien. This is TFNN. We're going to be coming right back. And as Kevin said, we're going to be at the Paris Hotel, Traders Expo, 14th, 15th, and 16th of October. Stay right there, folks. We'll come right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Swim takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go take a look at the strength versus the weakness. Well, first, let's go over to DuPont first. So DuPont had been moving higher all day. The DuPont has been on a vicious downtrend. We take DuPont back. What you're going to see, DuPont had topped out in March of this year, $76 straight. I mean, this leg was a vicious leg. $76 down to $47. You know, bottom line, one-way trip. Now, you come off that bottom this morning, and you come off there, and you got a little juice price-wise, but not equity-wise, not volume-wise. So what you had out here this morning was you had I believe you had DuPont rose the most in 5 months after Train Fund Management, the activist investor that lost its bid for board seats this year, said it purchased additional shares in the chemical maker and may not be finished trying to break up the company. The DuPont story is far from over. Ed Gardner, Train's co-founder and chief investment officer, said Monday on CNBC he was responding to a question as to whether he would go back at it again after DuPont investors rejected all of the 3 of the fund nominees and a May 13th proxy contest. Train co-founder Nelson Peltz, he's the big name behind it, called for deep cost cuts and a breakup of the 213-year-old company during a proxy campaign. The DuPont itself had won, and strategy chairman and chief executive officer Ellen Kullman criticized as costly and high risk. Bottom line is that she lost out today. After the close, she retired, and they had to cut the forecast. So it was up $2 earlier. It's up an additional $2 now. And thus far, you know, we'll see where this shakes out. But thus far, it's a dead cat bounce, you know. And you can't expect. Let me just see what they do. This thing's they're gonna break this apart, I suspect. So watch this, and you know the chemical business. So in their business, this is how this business is broken down. This is pretty cool. I love when you get these monster companies, folks. It's really cool how you can see the changes in what businesses they're actually in. So out of revenue, so last year they did $36 billion in revenue. This year they're only going to do 28, so that's a haircut and a half itself. Now out of that revenue, agriculture is $11 billion. Chemicals is 6.5. That's going down. That's minus 4.8%. This is the 3-year growth. Agriculture, they're growing by 7.24% on 3 years. Materials, it's getting contracted also by 2.9. Safety and protection is contracting only by 0.2%. 13 billion of the business is United States, 7.9 is in Europe, 7.7 is in Asia. Canada or Latin America is 5.5, and Europe, Middle East, and Africa is 560 million. Bottom line is that when you take a look at this structure, they're going to move quick, and you know we'll see how quick they can move. ILMN. So let's take a look at this one. Alumina. This is when the market was open, folks, we were talking about the failure out here. The failure in the marketplace out here today was the IBB. We want to do this update at the beginning of the show. Well, this, I'm not sure whether this come out of nowhere. We'll find out what this is. But alumina had closed at 163.17. It's trading down $23 at 140. And let's see what they have to say. So alumina drops after forecasting. Alumina shares fell 23% after the company forecast fourth quarter sales below analyst estimates. Revenue will be about 570. So they warned. That's what's going on here. This hasn't come in. This is a warning. Revenue will be about $770 million. The biggest maker of DNA, Dakota, said Monday in a statement. That compared with the average forecast of 603 million. Bottom line, let's see where 140 is. We take a look at this. Oh yeah, this is a mess. Okay, so this is off a high of 242. You're at 140 right now. She was up to the hill in light volume. Man, this is so weird. It's amazing. She's got the high volume swing point that's going to blow away tonight. That high volume swing point is 153.46. It's going to be a monster ABC down. It's going to run into 113. 113, where I'm going with 113, folks, is the January 17th, week of January 17th. The high is at 141. The low's 18. But watch this. That was 18 million shares, and we had already come down with 17.4. This thing will break apart, I suspect, tomorrow morning. Let's go over to the IBB and see what is happening with the IBB. So the IBB is trading at 310. It was at 313.20. Now, what the IBB had done, folks, is this. The IBB traded to 323 today, got over the highs of Friday, which was 316, closed at 313, was coming into the downdraft with 9 million shares versus 3. That's a failure on price, failure on volume. More than likely, it's going to be an ABC structure on the way down. And as I said a little bit earlier, what's so intriguing about the IBB and looking at the NASDAQ is that with the Dow can be higher, the S&Ps can be higher, if you remember last week, and the NASDAQ was down 1.7%. Why? Well, this might be the culprit here tomorrow morning, because 354 is your A point. Your B point is 285. So you're dealing with, what did I say? 366. So you get 66, and you get 15, 76, 81. Your B point out here is 323. So we got, what's that, 240. It's ballparking 240. So how we come into 285 is going to be, we'll see whether we break it with volume. It's a high volume swing low. It's going to be hard to break it with volume because it's 11.8 million. Bottom line, though, I suspect that's going to hit, well, let's just see right now if he even hits the Qs already. Yeah, it's already hitting the Qs. So the Qs closed at 105.50, 105.33 right now. There's going to be some action in there. And it showed, the IBB was showing out there today, like if you go over to the Biogen, that was down 380. Gilead, which has been a decent one in there, that was up 98 cents. But guess what? That was up with 14 million shares going against 23 million. You know, Amgen, we take a look at Amgen. Amgen was up $1.33 with 4 million shares going against 5.2 and 8.6. Celgene, CELG, that was up 18 cents. That was with 6 million shares going against 10 million shares. You're going to see, well, here, let's actually, this is where, when folks are working later, they can sneak out of a couple stocks. And I expect that's what's happening right now because, man, if you're in these biotechs, it's not bad. No, Celgene, it's not trading. Celgene, 116.62, it's out there. We'll go through a few more and we'll come back. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow Industrials closed up 304. NASDAQ up 73. S&P's up 32. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks. It looks like Mohawk Industries has not out with numbers yet. They are going to be out tonight. The Container Store, that is out with numbers. Bottom line, they're trading that baby. It's actually flat right now. It was trading down about $1. That's flat. Bank rate, let's see where that is. Bankrate.com, that closed at 1074, and that doesn't look like it's out yet either. 1 second. That's the 4th. No, this isn't out yet either. The big number is the biotechs. So what will happen is that when these futures open back up at the 6 o'clock mark, that NASDAQ futures will take some heat. It's going to be intriguing to see what type of heat that it actually does take, because if you remember, if we go take a look at the NASDAQ, so check this out. We put the NASDAQ up. If you remember, what had happened is that, let me get this day, because when the NASDAQ got taken apart the last time by the IBB, what had happened is that the Dow was at higher price, the S&Ps were at higher price, and the NASDAQ just took it south. And it's funny, looking at this chart, it doesn't seem like as bad as it was. Yeah, look, I guess, oh, there it is right there. I see what day it is. Okay, so it was the 25th. Yeah, it was the 25th. That's when the Dow closed down, but not like the NASDAQ. The NASDAQ had, I think it was the 25th. It looks it. The NASDAQ had gone from 4785 to 4659. Yeah, that would have been it. And what that had to do with, let me just see, I'll match that up with the IBB. That's when the IBB fell apart. Yeah, there it is right there. That was the day that the IBB, the 25th, that's it. That's when the IBB went from 331 to 304 in about a heartbeat. So, you know, alumina certainly isn't the largest weighting structure inside of that. But what you do have is that, in fact, the alumina is 3.5%. What you have, though, is Alexa Pharmaceutical is 4.1. Vertex is 3.7. Both of those were weak today. Gilead closed over it. Biogen, which is the largest one, is the weakest. The Biogen, this is where this, and this is where this deal turns into Apple, too. Biogen, this is 8.6% of the indices. So, like, that's a big number. You know, the 8% is inside this biotech. Celgene, Gilead, Amgen, Regeneron. Those are the ones. Now, you take, as one of our tigers was saying in the den, you take the biotech and then you put Apple on top of that, where Apple couldn't move. That in itself, folks, is a big problem for the NASDAQ. And the NASDAQ out here today, it certainly, you know, got price going. Zero juice behind it, though. And thus far, in fact, if we, at 1050, she's trading at 1033. I mean, 105.50, 105.33. Once she gets under 105.17, that would set up a pretty quick failure. You know, we'll see where that does come into play. We definitely do have out here, coming into the close out here today, your 5-day trend or arms is at a level of not euphoria, but it's pretty close. We're at a 0.47 today, 0.57 on Friday, 8.8, 4.3, and 6.1. When you're at a 1, it's an even deal, folks. This is Tom O'Brien. This is TFNN. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking to you right here tomorrow. Go get them, folks.